All right. Well, welcome everyone. We're so glad that you're here, and we're gonna get started. And I'll be sharing more about the program and the presentation. But Jeff, maybe why don't you go ahead and say hello to everyone to start?
Yeah, well, hello everyone. I'm calling in or zooming in today from Issaquah, Washington, and I've been a resident of the state here since 1984. And as I'll explain, I've been in many different kinds of businesses. So I'm looking forward to share with you guys, thoughts and ideas that might encourage you, and maybe just be thinking a little bit. Since we are a small group, when I get started, I'd like to hear from you as to what would make this the most useful bit of your time. So things that you want to learn about, and so give some thought to that. So when I start, I'll be asking people for what will make this good use of their time.
All right. Well, and so I'll introduce myself. I'm Jay Lyman. I am a librarian in Seattle, and I've lived in the state of Washington since 1968. And it's, when I was born. So, and happen to be still, still here and zooming in from Seattle too. So, I'm going to share a few things about how the library can help in each one of these three sessions that Jeff and I are doing together. I'm just highlighting a really high level walkthrough of like one of the tools that the library offers to help you. And today I'm going to be sharing about Simply Analytics. And this one is a really complex tool, so there's a lot of different ways you can use it. And in but I don't want that to scare anyone. So we also will help you use this tool. So you can book time with me or my colleagues that have expertise in using Simply Analytics and other business tools. So we'll help you figure out how to use that for your purposes too. Um, these tools that I'm going to share about are free for you to use. The library buys them, and then you can start at the library's webpage, log in with your library card, and have access to these like high quality, super detailed tools that would cost you thousands of dollars otherwise to just to get to this data here. So let me share my screen. I'm going to start. Actually, let me just start this way here. Give me a second while I get this going. Okay. And let me just back it up here. I'm going to go straight back to the library's webpage here. Jeff, can you give me a thumbs up if you can see the
Oh, yeah.
spl.org? All right.
Two thumbs up.
All right, two thumbs up for the library. So this is the library's webpage, spl.org. And if I just click on this programs and services and then business and nonprofit, takes you to this little page where you've got the business and nonprofit resources. You've all kinds of different things that the library does to help you here. And the one that I'm going to show you today is under this business research tools, and it's called Simply Analytics. So I click on the research tools, and then I click on Simply Analytics. And it's logging me in there because I was just in here a few minutes ago. But if we had been outside the library, it would have asked me for my library card and PIN number, and then it would have prompted me for an account that I could use to save my preferences. And I kind of pre-did all that just to save a little time. And you can see that I created uh, a report here, and all of this is stuff that I put into this, but this is for sauces and oils. So this is as if you were creating a hot sauce or creating some sort of oil or cooking sauce. So here's some relevant data that you can get from this database about your industry, about your market. So first of all, I've got across the top Seattle, King County, Bellevue, Kirkland, and then down the side, you can see I've got the number of people that live in each of those locations, their income, And then here in this line, you can see that sauces and gravies in Seattle is a $46 million industry. So that's how much money people in Seattle spend on sauces and gravies. If I divide that by the number of households, I get $128 per year that they're spending on that category. Now, some people spend more, some people spend less, but that's just the like sheer like total spending divided by number of households. We get to that. And that's a nice way to compare geographies because, Seattle is much bigger than Redmond, but Redmond and Kirkland are spending more on sauces and gravies. And Bellevue is actually spending a lot more. They're at $142 versus $128. So it's an $8 million industry in Bellevue, but that's because it's a smaller, number population wise. So this tool has like all these different things. We can get more specific about things. It pulls data from different sources, so we can from this other source called Simmons, we can learn, did households in this area buy Kikkoman soy sauce? Did they buy La Choy soy sauce? Did they buy sriracha? And so we get a lot more detail about things. Then we can, pull in census data, so we can get age, race, ethnicity, all kinds of information about, who lives in an area, and then even lifestyle information. So we can start to understand, how we can create marketing, where we can put it, so that it will be relevant for folks. And then you can even, if you go back over here from so far we've been looking at the comparison table, but if you go to the map, now let's map the sriracha hot sauce. So in a moment, here's where more people buy sriracha hot sauce than other places. Oh, pretty, it's pretty dark color all throughout, but you can see there's some pockets that have more. And then I've overlaid this with, if you click on the four, I had pet businesses. I was doing a different example, but under businesses, you could say, I'd like to see where are the grocery stores? And now it's putting grocery stores on our map. So you can see, where are their grocery stores? Where are they buying more of this? And sort of look at those two things together. Make sense? Whoops, went too far here. What do
Yeah, I
you
think
think?
it's that as I was mentioning to you, when people see this is data. And if you back up a little bit, and let's say you're thinking about getting into a business and you want to determine how big is the market, what are buying habits, this is just amazing information, and really the tip of the iceberg in terms of what the library can provide you.
Yeah. All right. Well, I'm gonna stop my share. Yeah, like Jeff said, there's a lot more. This is just the tip of the iceberg.
Okay, and should I do my screen share or
Yeah, go ahead though. So I'm going to pass things over to you, Jeff, and I'll let you introduce yourself more, and we can start,
sure.
dive into the content here.
Okay, and welcome some people who've just joined us. Glad to have you here. I'm Jeff Levy. I'll be talking to you today about the topic of should you be in your own business. Um, and first of all, let me mention just the slide here. If anybody has some questions after this talk, these are just ways of reaching me. If you want to stay in contact, and I don't reach out to anybody myself, but if you want to just follow each other, connecting from LinkedIn is not a bad idea. So you have my information here. The I put together an agenda, but as I mentioned to Jay before we started, this is a small group, and obviously you're here today because you're thinking about doing something in your own business, and I'd like to maybe set the perspective of just sort of assume I'm a friend. and you're thinking about starting a business and you've given me a call and said, Jeff, bring all the information you have. I'd like to talk to you about what I'm trying to do, and maybe just pick my brain a little bit. So I have an agenda with a lot of topics, but we really want to make sure that this is responsive to what your interests are and your needs. So before I get started, does anybody want to let us know why they came today or what would make this a successful use of your time? So I'm assuming that if you do the review that we didn't do it, we did good.
Hey Jeff, this is Karthik.
Yes,
Uh,
Kartik, thank you.
I This agenda is it's in depth and I'm excited, but I am more curious to know, like, in your experience, like what are the exact steps that successful entrepreneur take or have taken to acquire their first 5, 10 like paying customers? And
Mm,
and if you were in their shoes today, what would you do differently if you were starting again?
yeah. I mean, that's really a great question. I think clearly getting the boat launched and getting paying customers is so key. And I think one of the elements is understanding what are the buying habits of people. So if people don't buy within a month or 2 months, and if it takes them a while to create a budget, to get approvals, to get their spouse lined up, to get loans in place. So part of the answer to that question is understanding what is the buying cycle of the product that you're offering so that you build that into your plan and you don't frustrate yourself by expecting things early. And then again, I think layered on, I'm sorry, and then layered on top of that, of course, is people that buy that product or service, where do they normally go for information? So big topic. Uh, I think I'm going to touch upon it in different ways, but it's something we can talk about as well. Maybe we'll always leave time at the end of this today, or you could follow up because your particular industry might have some nuances to it that are just worthwhile chatting about.
Oh, sounds good. Thank you so much.
Yeah. Anybody else have any things that they want to make sure we cover today? Okay. So anyway, the agenda, basically, uh, this is a program around, is this a time to go into your own business? I'm a Johnny Appleseed for encouraging people to do it. And so I want to cover maybe issues that might go through your mind about, is this a time? Do I wait for the economy to be better, et cetera? I want to talk about motivations. I want to give you some statistics that I think are extremely powerful. Um, I've looked at myself and my own career and always very motivated when I was younger and ambitious because I had a family, I had responsibilities, kids to put through college, etc. So I've given a lot of thought to this topic of what are the true motivations because as hard as you try, the world doesn't always make it easy. So we have to develop the correct motivations to drive through the challenges so that you can make it to being in your own business. Um, there certainly are some, well, we'll talk about options as well, which is basically starting from scratch, buying a business or evaluating a franchise. There's a tactical element to this whole process of starting a business, and that is, how do you incorporate? Why do you incorporate? How do you fund the business? How do you get support staff around you? And what are the elements of planning for the business? And that business planning actually goes, Kartik, back to your question, that your business plan needs to reflect what is the normal buying cycle of your particular clients. And then I will give you a page of resources. And then I have some supplementary reading material that I'll provide to you guys that you can look at afterwards when you get the slides. So everybody okay with that agenda? Okay, thanks, James. James, I assume you're back from walking the dog and the dog's resting and you can see this on the screen. And Lindsay, did you have Lindsay, your name popped up. Good. Oh, no, that's a different person. Okay. So I won't bore you with my background. It's not overly important, except that I have a passion for career independence. I spend a lot of time with people today that are in the corporate world or have recently been laid off, and they just know that that is a short-term game, unfortunately. You know, you find very few people in their 50s or early 60s that are still working in corporate America. My background is I moved here in 1984 to start a business in a garage up in Mukilteo. And in that, I learned how to raise money. I learned how to provide structure. Um, Number of years ago, I invested in a franchise. I've spent some time writing. In fact, there's a book that I co-authored, which is in the library, so you guys can have access to it if you want. I taught a course on entrepreneurship at Seattle Central College for a few years. And then I was also the chairman of the Entrepreneurship Center at Seattle University for a number of years. So I share that only with you guys, just sort of understand that when I share ideas and concepts, they typically come from a place of personal experience as opposed to academic approach. So is now a time for self-employment? Good question. Good question. When I would ask that question 4 or 5 years ago, I'd get a different answer from people. Now, when we're in sort of a difficult political environment, we're into some challenges with interest rates, et cetera, people say, well, let me wait till the economy gets better. And so I just want to share some information that I think you might find interesting. So I've lived through in my business life the dot-com bust, the Great Recession, the pandemic. Who knows what we're living through now? But but if you look at the information on the right of the screen, to me, this gives me great encouragement. So after the stock market crashed in 1929, it came back almost 90%. Um, it shows different recessions and what the returns were. So after every challenge that we've had in the country, the economy comes back. So why do I mention this in the concept of, is this a time to go in business? Sometimes opportunities present themselves when the economy is a bit challenged. Companies that or competitors that may not be well structured may struggle, but also sometimes it's easier to find employees. It's easier to get funding. It's easier to negotiate rents and things like that. Easier to get contracts because things are a little bit in tumult, so people are a little bit more conservative. But for the entrepreneurial mindset, it really creates opportunities. And Kartik, to your question too, which will go through my mind as I talk, uh, when there are difficult economic times, you do have to reflect it in your plan. It doesn't mean it's not the right time to start a business. It just means that you might have to build a little bit more conservatism into the plan. Okay. You guys, anybody who gets to know me personally will know that I'm an optimist, but I've worked through all sorts of challenges and just believe that if you have a good plan, you'll make it work. So back the question of, is now a time to go into your own business? There's a lot of considerations that you want to think about. You know, what is your financial situation? What is your family support at home? What does the market look like? But I will tell you that my biggest motivation was building a dream. I got tired of working for somebody else's dream, tired of somebody else telling me I had to meet certain goals, tired of someone telling me I couldn't take a vacation when I wanted to. So one of the foundations for, is this a time to be in your own business? Is think about your dream. What are you willing to fight for? Doesn't mean it's going to happen right away, but the vision of what you want your life to look like. And I'll mention as well, in the entrepreneurial world, there's no such thing as age discrimination. You can work as long as you want. And I'm a good example of that. So again, when I think about going into your own business, this is Kartik was kind enough to be at my other seminar. I have a perspective about work, and if you go into your own business, it's going to be a couple of years of very hard work, but also go into it with a vision of what is the role the work is going to play in your work-life balance. Are you going to make sure you have time to develop relationships, take care of your health, personal interests, etc.? I have found that if I look at my business as a motor, as a lever to create a quality of life, it gives me the motivation to challenge and work through it. So I mentioned age discrimination. I don't need to beat this to death, but today, 50% of all people 50 years or older lose their job. That's the way the statistics are. So if there's one profound reason I can give you guys to be thinking seriously about controlling your own destiny, that's it. Because we all live longer today, we are healthier for many more years. And so being in your own business is an opportunity to start taking care of yourself. And this is another bit of just some data before I get into some of the more tactical things. One in three, well, one in six people in their 50s are self-employed, one in three in their 60s, and one in two in their 80s. So it's pretty interesting. And then Barclays Bank took a look at this and said that um, people around their 50s will have a natural break in their career. And what do you do? And oftentimes that's when we think about starting a business. So starting to get, I don't know what each of your circumstances are now, but laying a foundation, starting to get educated, learn how to do business planning, and we'll cover that today, I think are fundamental elements to prepare yourself for the future. Okay. So when you start doing your planning, and a lot of times we will jump right into the business plan. We'll jump right into forecasting sales. We'll get right into, what are the costs to produce those sales? What are our overhead costs? I'm going to suggest that you sit down and really think about what are my realistic income requirements? Am I willing? And I'm sure, Kartik, not to pick on you, but probably behind your question is, if you're going to launch a business, how soon can it start making money? So you need to really think about how much income you need to support yourself, how much income you need to support your household, what would be the ideal goals in 2 to 3 years from now. Do think about the sort of lifestyle. Businesses can be totally self-absorbing if you allow it to be. So you have to build some guardrails and make sure that is a healthy decision for you. Um, Start educating yourself on the concept of wealth. And the concept of wealth is, how do you keep more of what you earn? And there's different ways of doing that, certainly by taking advantages of the tax benefits that small businesses have, being able to set up like a 401k or other ways, Roth IRAs, et cetera, through your business to preserve more of your capital. And then lastly, think about what your exit strategy is. So right now, most of you are early stage. I'm thinking about going into a business. But at that same time, you've got to be thinking about, how do I get out of the business? Is it something that is saleable? Is it something that my family might take over? Is it a legacy business? So you want to be thinking about those things to a degree in the beginning. I'm going to take a quick drink of water. Anybody have any questions or thoughts on some of these concepts? Okay,
Just to your point, I have a quick question. When you
yeah,
were saying, I'm sorry, my dog is probably barking, so sorry about that. So
that's
like,
good.
say, suppose if I start from like a perspective of, like a realistic income, right? Like I say, like, okay, I wanna plan so that my business can achieve like $50,000 a year. I'm just throwing in a number,
Sure.
and then I like, are you suggesting that like I start from there and then I drill down and say like, okay, how many customers can I actually reach that will help me attain that? Is that what you're getting at?
Yes, that's what I'm saying is that if you start with sort of like just a broader realistic number that you have, and then start reflecting that against what you have as your best assumptions in the business plan. Okay. So you want to have a measurement. So if you put together a business plan and the business plan generates, $20,000 a year, you can say, well, okay, that's what adjustments can I make to get to that goal I have of myself of 50,000 a year. And again, 50,000 doesn't have to be the right number, but it's that everybody today should know what it costs them to run their household. You should have some kind of a financial planner that gives you a vision of what you need to save so that at some theoretical date you could retire if you wanted to. So I'm suggesting that yes, you start with the bigger picture and then we get down into the details of the planning. And I'll cover that as well today.
Thank you.
Okay. So anyway, it's not, just so you guys know, it's not easy being an entrepreneur. It's going to be the toughest thing that you've ever done. There's a lot of unknowns to it, and that's why having a good plan, working the plan, being properly motivated is so critical. So why do people go from where you are today to starting a business? And you'd think we tend to get focused around the numbers of it. How much money can I make? Um, I would tell you that from my experience, I wouldn't go into a business unless it didn't have the potential of giving me the income that I needed or the value or equity that I wanted to have. But that was never the motivating force. I believed that if I did the right things, then I knew what I needed financially. If I did the right things, they would happen. But but the real reason people, I think, move forward is they value their time. They value their time more than anything else. Um, so it's that freedom or independence. It's being able to control the work you do, who are the people you engage with or not. If you got into a cocktail party with people, there is a huge different sense of being able to say, I own my own business. I support the local Boys and Girls Club. I spend more quality time with my family. So that is a major driver. Another major driver is the concept of job security. Today with artificial intelligence, with all the sort of earthquakiness of the job market today, I'd rather be in a business where there's no guarantee of my success, but I know no one is going to come in and lay me off because they're going to make more money by doing that. The other thing that I think is very motivational for a true entrepreneur is there's no cap on your income. Of course, it'll be determined by the nature of the business, how smart you are, how hard you work. But if any of you ever worked in human resources in a company, if you have a certain job title, you're only going to make a certain amount of money that's related to that job title. And so if you're in your own business, that burden is really off. And lastly, the concept of equity. If you invest resources, if you invest time, does the business that you've invested in create value? And when I say value, that can come back in a number of ways. Can you have somebody else run the business over time? If you have children, could they run the business? If you wanted to sell it, would you get a multiple of the earnings of the business? In my life, and you guys can look at this through my LinkedIn, I've had two situations where I've bet the farm, basically. My wife and I invested in a business that I was a key principal of. And I think 7 or 8 years later, we were able to sell it. And that created some financial security. And then a couple of years later, that same company, I was able to acquire it back with some of the other investors and sold it again. And so you have to be thinking about how valuable is your time? When you work for somebody, at the end of 2 weeks, they pay you for what you've earned, but you've really not built any equity up. Motivation for being in your own business is it can be building value over time. Does that make sense? Okay. So what is the cohort that you guys are thinking of joining by becoming small business owners? Now, this is a very busy chart, very busy chart, but I think it has some interesting data in there because you're not alone. So today, almost 50% of the people that start businesses are in the Gen X population. And that's, I think, between 45 and 50. I have a little cheat sheet I can go to, but I think it's between 45 and 55. The baby boomers, which is my generation, is becoming a smaller part of the pie because we're either dying or truly retiring. And coming up behind that, the millennials, younger people today don't necessarily believe that working for corporate America is the future. Um, it's still pretty highly leveraged in the male area, although women's business ownership is growing dramatically. We're seeing a lot of programs that are extremely helpful for that. Um, some of you might know that in Seattle we have the Women's Business Center, which really helps focus on women, minorities starting businesses. Um, so this data is somewhat self-explanatory. I'll also point out that people that start their own business today, they tend to be educated. And so about 43% have bachelor's degrees, 27% have master's degrees. But I want to be really, really clear. Um, if you have a good idea and if you're willing to not take shortcuts and get the disciplines to create a business entity, it doesn't make a difference what education you have. I'll mention a little later, I co-authored a book with a gentleman who dropped out of college and he wanted to write a book to give him more credibility. Today, he's an extremely successful, credible guy. But it wasn't the education, it was the life experience that made the difference. Okay. Okay. So the entrepreneur, when I boil this down, is someone who will assume risk and responsibility for starting and managing a business. And you have to get into that mindset to be able to do that. And how do we get into the mindset of understanding risk and responsibility? It really comes down to one, being able to keep an open mind, being willing to learn, being willing to reach out for help. And I'll be giving you guys some resources to go to for help, including our great host today, the Seattle Public Library. But you will never get the benefit of business ownership and controlling your own time unless you're willing to take on some calculated, thoughtful risk. So I want to just give another 2 seconds on this slide. You cannot be so conservative that it holds you back from moving forward in your life. Okay. This slide just really talks about, again, that motivation. This slide, I've got a lot of data to go into, so I'll just maybe cover this briefly. I think when you think about starting a business, it's like that iceberg in the water. You really, 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 you can't only look at that shiny object. You can't only look at the sales and the fun part of it. You've got to do things that maybe you're not comfortable with, that will become a stretch for you, that you'll need to gain outside resources. And my message here is be self-aware. You likely have gifts. You likely have ideas. There's areas that you'll do well. But if it's an area that you don't have that gift, then you've got to learn about it or get help from an outside source. So do you have what it takes? And again, I'm a big believer that when we think about entrepreneurship, we have to be more self-aware before we start so that we can be prepared. And does your business require leadership? Is this a vision that you have? Will you be seen as an expert, as a visionary in your field? Um, Today, marketing is so different than it was when I started my career. If you're not into social media and into all those elements, you're not going to be successful if you're not managing that well. Uh, are you comfortable on the financial side of it? Uh, what kills early stage businesses, and here, Kartik, again, you were kind enough to ask a question. What kills early stage businesses is aggressive plans that assume revenue is going to come in before it actually will. So you need to be able to have a way of tracking and maintaining some kind of predictable cash flow. If you're going to have people come into your business, um, hiring right, managing correctly, motivating, key elements. And then the last three, I think, will be really important is have you properly identified your target market? And this is the stuff Jay was talking about in the beginning, and that is, if you're going to sell hot sauce, who buys it and where do they buy it and how often do they buy it? So you need to be able to identify your target market. Uh, you need to be able to create the marketing, a predictable sales system. And again, Kartik, with your question, I can't give you too much input, not knowing the industry, but you've got to create a predictable sales system. And then lastly, if you want a business that's sustainable, can you deliver on your promise every time? One of the philosophies that I sort of have it ingrained in me is under promise and over deliver. Meaning, if somebody asks me, can I do something by Wednesday? I'll say, well, I probably can have it done on Thursday. Is that okay? But I'll deliver it on Wednesday because I want to make sure that I'm setting up this expectation of client fulfillment and making them feel happy. Are you prepared to do that? Do you understand what's necessary in your business? Okay. So let's talk about these options and maybe anybody willing to share the nature of the kinds of businesses they're thinking about getting into, please.
I can say I'm in the very early stages of this, just trying to suss out any information. But looking to start a repair cafe with one of my friends. Um, to become like a community space, but also a space for like a circular economy.
Okay. It was hard to hear you. I don't know if there's some background going on, but did I hear
Okay.
a cafe with your friends?
Yes, very likely a repair cafe. I can also send it in the chat.
Okay, a repair cafe.
Yes.
So they would repair things?
Yeah, it's a model they have in Europe, but not much in the US. So
Oh,
it's
interesting.
a coffee shop partially, but then we also want to make it like an event space in addition to a resource to
Yeah,
repair items.
great idea. I think doing some good market research around that would be wonderful. And thanks for sharing.
Thank
Anybody else have a business idea that is in the formative stages?
I can share. Can you hear me?
I hear you perfectly, Cindy. Yes.
Awesome. I'm an artist and I've been wanting to start to sell my art. So like original paintings and also prints of those originals as well.
Nice. Very nice. And my wife is a bit of an artist too, and I try to encourage her. Um, but she has no interest in making a business out of her art. But good for you.
Thank
I
you.
think that one of the things we did, you've heard of the artist Matisse, of course, who's dead, but his grandson, this your comment reminded me that his grandson bought the rights or inherited the rights to all the Matisse paintings, and he's put them into um, uh, plates and serving platters and cups and things, and it's absolutely magnificent. For our 45th wedding anniversary, I bought my wife a Matisse plate. And so art is so important. So good for you. Let's keep thinking about this. So no matter what your idea is, there's basically three ways of getting into your own business. And in your case, Cindy, this would you'd be in the first category. You're starting a business from your own idea, and we'll call that an independent business. So it's one where you are going to have to think through, who are the buyers? What is the delivery method? Will you do this online? Will you will you license your art to somebody that's going to put them on t-shirts or whatever? Are they things where you might be given I forget what it's called when somebody hires you as an artist to do a specific project for them. So you've got a lot of things to sort of sort through. The second option is buying an independent business. And this is something I've done twice, not by myself, but in partnerships. And that has some real benefits. And I'll go through the positives and negatives of each of these. And some of you, if you don't have your own idea, or if your idea doesn't pencil out in the way you thought, then investing in a franchise is another way of being in your own business. My business today, my business life is owning a franchise owner. So that's another vehicle. And we'll talk about the positives, negatives. And also, for those of you who might have an interest in that topic, I think, Jay, in early April or the 30th of this month, we're doing a talk on franchising, similar format to this, right? I could tell, Jay, you're looking at your library. Okay.
I'm going to put the link in the chat, but yes,
Uh,
I think that sounds right.
okay, thank you. Okay. So first of all, again, I want to remind you guys, sometimes it feels very lonely when we think of stepping out and doing our own business. But the true statistics are 99% of American businesses are considered small businesses. Small businesses are typically under 500 employees. Well, that's still a lot of employees, but they're considered small businesses. Um, and 43% of businesses are women owned. So uh, I want to encourage you that if you go additional steps after our discussion today, to reach out to the community that is in place already to support you. Now, we know the library is there, and I'll give you other resources to help. Okay. So the topic of this slide is if you're going to start an independent business. So I noticed there's some things in the chat. Let me just take a look and see if there's anything that's coming up.
We had a couple of folks share their lines of business selling makeup, coffee book shop, and then I put the link to the
Yeah.
event on March 30th.
Yeah, I think creativity is so important when you're thinking of starting your own business. What's that niche that you're going to fill that nobody else has really thought of? And are you going to do it better than anybody else? So if you're going to start your own business, I think the positives about it is you're creating a vision, you're creating a brand, you're bringing your expertise, or in your case, Cindy, your talent into the market. You are creating the pathway, the operations to bring the product to market. Um, it typically is a business that if you're starting a business, it's typically something you have background in. There's a practical element to that, but there's also the fact that if you were going to ever borrow money, banks likely would not lend a startup business unless you could prove to them that you've got experience specific to that industry. And there really is a high potential for reward when it's just like, when Bill Gates started, pretty simple business, wasn't making money, but obviously there were no limitations on where they would go. But I try to be very balanced in these talks. So there are some negatives for doing something independently. Um, so you are responsible for everything, all the decisions, even making sure that you have proper insurances and protecting yourself from bankruptcies and those kind of things. Um, a lot of times, Sue, you don't know what you don't know. And when we get to the end of this talk today, I'll be giving you the names of a couple of groups that are free that provide services to entrepreneurs and startups. Um, so you may not have the support that you need. Unfortunately, independent startups tend to have a little higher risk of failure. So you want to make sure that you're not betting the farm, you're not investing everything in this. Um, And remember, you are the human resources, IT, accounting, and marketing departments. So be thoughtful that, when you start a business, your time is the most valuable thing you have. And if you're spending time trying to learn IT or trying to learn accounting or marketing and not time on the things that are going to shorten the span of bringing money into the company, that's a potential problem. So time management is a potential challenge in starting your own business. Okay, so the second choice, and I think this is a smaller group because it's a little bit more, I'll use the word sophisticated, but I think it's more of a risk, a person that is willing to maybe take a little bit more risk and look at a bigger investment if they want to buy an independent business. So the positives, uh, when you invest in a business, the business has an established track record. The um, the risk is really taken out of it because it has customers. It knows when they buy. It has cash in the bank. It has operating systems. It has a product. And oftentimes you can get immediate cash flow if you think about buying a business. And if you're what's called a strategic buyer, you can look at that business, see what it's missing, and take it to the next level. Back in 1986, I worked with a group and we evaluated a very, very old, stodgy scaffolding company. And we put together a group and we invested in the business and we brought in new technology and it became a very dominant company in its industry. But when we made the investment, we knew the core business was very solid, and we knew that we could take some money out of it immediately in terms of feeding our families, et cetera. Okay. The negatives about buying a business, you got to be a shrewd negotiator. You got to know what the timing is. If the business is at its peak, is it going to still grow or not? Um, are you getting the whole story? And again, I could tell you stories of where I learned the hard way that you may not be getting the whole story. Sellers don't always be forthcoming. Um, are there any existing problems in the business that you might have missed? Um, is it knowledge or tribal knowledge that exists in the business that you have to protect? And so the process of purchasing a business can be daunting. You might invest a lot of money and at the end of the day, not be able to close the deal. So I don't know how many people on this call are interested in this topic, but it's important to just cover it briefly. And then there's the franchise side. As Jay knows, I've been doing franchise coaching for now 24 years, and I've helped about 400 people go into businesses. And interestingly, it's because everybody wants to go in their own business, but not everybody has their own idea or is confident they can put together the systems. So franchising, and hopefully some of you will come to the next session, but it's a concept that covers 80 different industries. Food is only one of them. You don't, in this category, you don't need experience because they're going to train you on the experience. Um, you do get the benefits of being in your own business. So I'm JL Consulting Services, DBA, doing business as my franchise name. Um, it creates a win-win relationship because the franchisor only makes money if you're successful. Um, Oftentimes they can be scalable, and franchises are regulated, and there are things that are in place that give protections to you as an investor in a franchise. Negatives, And I always go back to knowing thyself, knowing thyself. You can't be a cowboy or a cowgirl. You gotta you gotta pull the reins in and follow the system. Um, the biggest reason why franchises fail is people go in and they're trying to fix it right away or take shortcuts right away and not follow the proven system. There are upfront investments today. So, if you're starting your own business, you decide what your upfront investment is. It may be enough, it may not be enough. In a franchise, they tell you what you need to invest to be in that particular business. You need to be a coachable person. Um, if you're not coachable, if you can't take feedback constructively, it's not a good concept for you. And the other thing is when you invest in a business, in a franchise business, you're signing typically a 10-year agreement. I recently was working with a client that their franchise actually was a 25-year agreement. And I said, holy cow. But there's other nuances to that. But you are locked into something. You don't make the decision unless you're committed to it. So, any questions, guys and ladies, about the three different types? I use this to take a drink.
And feel free to unmute yourself or
Yeah.
type questions in the chat. I'll read them out loud.
Thank you, Jay. If you'd monitor the chat, that would be great.
You bet.
And again, if you have questions that relate to research, Jay and I would be thrilled if you followed up afterwards, or if there are clarifications you need from me. Just if you do reach out, let me know where we met, because I do these in different venues and it helps give me context. So this is a very tactical part of this discussion, and it's sort of how do you incorporate, why do you incorporate options for financing and elements of the business plan. So I know this is a very small, a lot of graphic on here. This is if you may want to print this out, but why do we incorporate? Why do we incorporate? And there are different levels of corporate structures. So you have the sole proprietorship, which is not an incorporation. So if you see, John Smith Company, they're likely not incorporated. If you see John Smith Inc., it's likely a C corporation or an S corporation. Or if you see John Smith LLC, it's typically a limited liability corporation. The three I've just identified, the C, the LLC, and the S, have a specific purpose. And the purpose is to, one, it makes you look more professional, but two, it protects you against certain liabilities. It protects your personal assets against certain liabilities. Now, um, when you set up a corporation, we tend not to think about what are those legal risks, but we do live in a society where someone can sue you for some reason or another. And you want to make sure that this is not going to have you lose your home or something else. Uh, it's called the protection of the corporate veil. That's why we have these corporations in place. But the corporate veil can be pierced in a couple of circumstances, and I want you to be aware of them. One, if you do something illegal, you're not protected. If you do something where you should have known better, so you were negligent, you're not protected. And if you signed a personal guarantee, so let's say, for example, you borrowed money from the bank or you got a line of credit on some inventory you were buying, and you personally guaranteed that, and for some reason you could not pay it, your corporation would not be able to protect you from that. So just be a knowledgeable consumer. Um, Today, most people starting small businesses will be an LLC or an S corp, and you can read on here what the differences are. I had in the past 25 years, I've had several businesses, but most recently an S corp which is my main business. And when I formed a partnership on a book that I published, we had an LLC because the LLC allowed two LLCs to co-invest together. So sometimes there's some elements there, and you want to talk to an attorney or talk to an accountant in terms of what's the best structure for you. But I don't think you can go terribly wrong with either an LLC or an S corp. Another element about an LLC is typically people take out distributions, and that's how they take money out of the business. And I've heard that that sometimes can save you some taxes. In the S corp, you typically take out a salary. And the last thing I'll mention is that, not surprising for this reason, C Corp is very popular because if you have retirement funds that you want to use to invest in a business and avoid a tax penalty or avoid paying interest on it or avoid paying taxes on it, that can be done through setting up of a C Corp. And I'll give you guys a link if you want to learn more about that. Okay. So where do we get money today? And this is done from a survey from a company that's involved in all these different lendings. Over 50% come from these 401k rollovers. When I coach people, I try to make sure they understand that, whether the money comes from your aunt, from a bank, from your savings, from your retirement fund, it's all the same, it's all green. So how do you get it at the lowest cost possible? And so the lowest cost possible is that 401k rollover, going to, if you have cash available, or SB loan. SBA loans today tend to be a little less attractive because they are high interest rates that we're all aware of. So I saw something come up on the chat. Jay, did we have a question or comment there?
Comment was yes, please. And I think it was related to you sharing about this. So at the
Okay.
beginning of this slide.
Yeah. This is, yeah. Again, I'll give you some links for people who want to follow up on some of these things as well. So, if you remember my comments in the beginning, this is a big topic. You have to plan to go through all the phases of learning. But my hope is that by the time we're done today, I've created more encouragement than discouragement on being in your own business. So what are the stakeholders you need? And again, you don't want to become a tax attorney. You don't want to become a CPA. There are situations where you're going to need outside help. So you definitely need an accountant or a minimal a bookkeeper. I did the books on two of my businesses myself up until this past year, and I used an accountant to help me set it up and then review it and make sure that my tax planning was in place. So having a good accountant that's interested in you and will treat you personally as a startup is really important. You can't avoid sometimes having an attorney. If you're signing a lease, you want to have them review it. If you're putting together a personnel manual, you want to make sure that's reviewed. Um, if you're giving out proposals or accepting proposals for work, you want to make sure that you're not accepting any more liability than you should. Having proper insurance. And again, new people considering a business may not understand the difference between residential and commercial insurance. With the residential, you go with a Geico or an Allstate or one of the other branded names. If you're doing commercial insurance, you typically engage a broker. They work on a commission from the insurance company. They help you evaluate the risk in your particular industry, and you pay the broker who then make sure that you have the insurance coverage you need. Okay. And also, if you want to develop a relationship with a bank, you don't want to do it when you need the money. You want to do it when you're exploring what are the kinds of banks that are interested in the nature of your business and they're going to support you. Banks are not necessarily your friend, uh, but you want to have a relationship there. Oftentimes, I've built relationships with my bank over the 40 years we've lived here, and I know that if I need some help or get stuck on something, I don't have to work through the bureaucracy. I've got somebody I can go to. Look for mentors. And again, I'll give you names of groups that provide mentors for business startups. And then some people actually pay for a business coach. And a business coach is someone who, basically will help you set goals and work with you and try to hold you accountable. Any questions? I know I promised to throw a lot at you guys, and hopefully this is information that's helpful to you.
There's a question in the chat.
Okay,
Would you be able to explain the 401k financing for business venture a bit more?
sure. Yeah, happy to do that. And again, I know what my limits are too, but I've been through so many of these. Um, and I will give you a link to a local company. Well, they're not local anymore. They're now in Boise. But the way these things work is, let's say you worked for a company and you had $300,000 that you've accumulated in your 401k. Once you've left that company, they typically require you to take that money out of that. And you don't want to actually take it because it creates a tax penalty, etc. So that money is normally rolled over into it's typically called a self-directed IRA, and you have a company like Fidelity or someone else manage it for it. So now the money's sitting in there, but you can't typically add money to that. So now you want to start a company and you're looking for resources. Uh, you typically hire, there's two companies in the country that are really experts in this. And what they do is they structure an, a C corporation. So you name the C corporation, you decide on how much money you need, and after all the legal paperwork is set up, your corporation is set up, your banking relationship is set up, the the cash that you need from that 401k is taken out of it and put into a new 401k in the company that you've set up. And then that cash is exchanged for stock in your new company. So that's how you get the ability to use the money, and you're not paying it back. It's just like if you invested money in General Electric, it would be stock in your 401k. You're not paying it back. You're hoping the value goes up so you can sell it at some point. So that's the mechanics of it. One of the side benefits of doing that is that you now have a 401k in your little company that you could put money into, or if you have employees, you can um, offer it to them. So I don't remember who asked the question, but was that helpful? I hope so.
Yes.
That's all I know.
Yeah. Yes, they replied back that it would work.
Okay.
And then follow-up question, would that work for an LLC as well?
Oh, no, no, no. These are very strict under what's called the ERISA laws, and it has to be an arm's length transaction. And by definition, a C corp is a standalone entity. So it can only work with a C corp setup. Yeah. Yeah. Very good question. And again, I'll give you a link of a company that's very much oriented towards trying to educate people about these. And I'd say the franchise deals I do today, probably at least half of them are funded in that way. It just makes sense because you know, it's you guys have enough detail, but you'll find out that it's a very viable way of financing. So now we'll talk about the business plan. And
Jeff, can I sorry to interrupt.
sure.
Can I ask you a follow-up question on that one?
Yeah, of course.
So what I heard was that the corporation receives the cash from the stock sale, and then you use it to like start or buy the business, or like you do that.
Yes.
So the foundation of it, right? Like how is that uh like how does the stock plan buys, and like how is it reflecting fair value is my question of the
Okay.
stock.
Good question. Good question. Um, I think, it's a question. I'm not sure exactly the answer, but I think just like you're valuing any business at its startup, it's probably valued at the value of its assets. And so it may not be worth it. Well, it's worth at least the cash value at that point.
Got it.
But but the better answer to your question is because these are managed by what's called a fiduciary, so to stay within the laws of a true 401k, every year there has to be an independent valuation of the stock that's held in there. So you
Mm,
get that value reported to you every year.
got it. Got it.
And,
Makes
and then,
sense.
of course, if you decide to sell it, you value the business and what you think is worth, and that's what the stock ultimately is worth, is what someone will pay for it.
Makes sense.
Yeah,
Thank you.
you're welcome. Okay, anybody else have any questions and stuff? Yeah. If people typically who go that route, take a month or two to evaluate different lending options. It just depends on what's right for you. Some people say, look, I'm not going to touch my retirement plan. Um, Though they forget that it's all in stocks, which aren't always the most secure thing either. Um, and they decide to go with a bank loan if they can get it and pay the interest. I don't think that makes a lot of sense, but it may be the right decision. So first of all, every business needs a plan. And so I'll talk about the elements of a business plan. It goes back to some of the earlier questions. If you are going to borrow money, you need a business plan. Even if you're going to borrow money from a family member, you have a much higher chance if you show them a business plan. It helps break the business down into detail so that you can use it to make sure your team is functioning together. It also helps to rationalize the business. If you can't demonstrate on paper the proper assumptions that this business is going to get you the income that you need at a certain point, self-sustain itself, self-fund it, it may be telling you don't go into the business. And franchises typically require the plan, but they do it after you're in. You can get enough information beforehand to make a decision, but the actual development of the plan, like I'm in my franchise 24 years, every year they want me to re-evaluate my plan for the next year. It's just good business sense. Jay, are we doing okay time-wise? I probably got another 10, 15 minutes, and then we can open up for questions.
Yeah, I think so. Yeah.
Okay, okay, good. So these are the elements in a traditional business plan. Now there's something called the lean method. It's not an area, I'll give you a resource for it. It's not an area where I have direct experience. Lean method is typically for like technology startups. This is a much more traditional business plan that the banks would look for. And these are the elements, these are the chapters. I would start with the financial documents, meaning that you want to have a projection of revenue, projection of the cost to produce that revenue, and then a projection of the overhead costs by month. If you do that on a spreadsheet, you start to get an idea as to at what point does the ink go from red to black, from loss to profit. You then want to work on your balance sheet. So does the company have the resources? If you look at Amazon when it got started, it lost money for years, but a public company had a lot of resources, strong balance sheet. The balance sheet will help you understand what the assets are of the company and the liabilities. And lastly, and this one is so critical, it's cash flow. So sales are a partial indicator of success, but not a total indicator. So you can be selling and people could not be paying. So you really want to look at when does cash actually come in and when does cash actually go out. If you think about why companies get lines of credit sometimes, it's because cash in and cash out aren't necessarily aligned perfectly. But those are the three financial documents you need to have. Once you're comfortable with those, then I would go to the executive summary. An executive summary is basically 1 or 1.5 pages, and it's what's the problem that you are solving for the world? Why does the world need your product? Um, what's the team that you're bringing to make this happen? And thirdly, what's the return on the investment that you'd be making? And so the reason I suggest those things is because if you're going to go to a bank, if you're going to go to someone to borrow money, that's what they're going to look at. Do these financial statements and projections make any sense? And do I believe that the market's there and the team is the right team? And if I put my money into it, what's my return? And then all the other stuff, depending on your business, you've got to fill in. So describe the products and services that you're doing. Are you going to be having full-time, part-time employees, contractors, etc.? Make sure you evaluate the marketing. Um, what is your go-to-market strategy? These are all the things you have to work on if you're starting a business from scratch. If you're investing in a franchise, a lot of this is provided to you. And then please don't forget to consider what are the risks? What are the things that might happen that can impact the business? And I remember learning this the hard way. Um, my partners and I were looking at buying a business. We met with an investor group. They asked us, well, what can go wrong? And I said, nothing. We've all thought through everything. Well, it was the wrong answer. The answer is these things potentially could happen, and here's how we're going to be prepared to deal with them, or here's how we're going to avoid them happening in the first place. So please give some thought to that. Okay. And so I promised a couple of resources for you guys that you may want to use. Um, so this is some business planning software that I've never used it, but I've heard good things about it, and people have asked me to have some kind of an offering. I don't sell it, but just something that you guys can look at. Also, the Small Business Administration has uh, templates on their website for business planning. The book that I told you is in the library was actually written around the Great Recession, but it's a book that really I think has legs today and helps people who are thinking about starting a business. And then the E-Myth is a very, very popular book, and it talks about your relationship to the business. Are you going to work in the business or are you going to work on the business? Are you investing in a job for yourself or are you building something that has a vision for what you want your life to look like? And then where do you go from here? What do you do after this call? And one, you have the SBA, Small Business Administration, has a lot of resources. You can find their programs out very easily. If it's franchising, I might suggest you talk to me before you get too deeply in that because it's potential potholes that you want to avoid. People go to meetups today to get information about the market that they're in. Of course, the library doesn't, it should be up here, but we guys know what a great resource that is. Um, well, I have your business librarian right there. I should write Jay Lyman. Um, Score's homepage is on here. Score is a not-for-profit group that is a subsidiary of the Small Business Administration. They provide free counselors, and I would recommend them strongly, particularly if you have a niche business. If you wanted to do a cafe or if you wanted to market art, If you go to their website, you can actually look locally or nationally for free mentors that have background in the industry that you're interested in. It's a tremendous asset. Um, I mentioned these 401k rollovers. If you were to click on this pre-qualification, that gives you an access to a company that manages that. Um, if you fill out a form for them, they will let you know what you could qualify for. And they'll probably reach out, but they're not heavy sales. They're really looking at educating. So they're a great resource. Um, this looks like it's not opening, but there is a link here to just some additional trends going on in small businesses. And if you've attended one of these sessions, you can always reach out to me. Again, I'm not going to send you a bill. We're probably not going to get involved in a long-term uh, thing, but I'm happy to just hear what the story is and give you some suggestions. And so my last slide here is just a reminder that everything you do in life that's important begins with that decision to try it, to at least go through the early stages to see if you can justify being in your own business. And again, you've got my stuff here if you needed to contact me. And then I'm going to pass on going over the detail, but in the supplementary reading, you have things like an explanation of the profit and loss statement. You have more detail on, well, on what the 2025 election is going to do to affect us in 2026, more small business data, and I'll stop at this point. We're going to do an end share. Okay, so now it's just us.
All right. Well, I will turn off the recording, so we'll say goodbye to anyone who's watching this after the fact, and thank you for joining us.
Yeah, you guys have been quiet, so I assume that the hamster's wheels were going around and you were absorbing. Jay will be following up with a recording of this, which I will be looking forward to seeing myself.